Steve Eisman, the man who famously bet against the 2008 housing bubble, is back with bold takes on today's market chaos. From trade wars to Middle East tensions, he reveals why uncertainty might actually create unexpected opportunities. Ready to rethink risk? Eisman's insights will challenge everything you thought you knew about investing in turbulent times.
Tariffs and the potential for a trade war, I think, is really the only risk to the market right now. It's completely binary, and I really have no way of handicapping it. And then, what's going on in Iran right now, I think, is actually potentially extremely positive for both markets and the globe.
Okay, talk about the positivity on Iran, because most people look at that and think, oh my gosh, potential for a wider war. What does that mean?
I play it out as if nothing had happened. Iran, as we all know, was very close to getting a nuclear weapon, and unfortunately, Iran is run by a government, and the only way you could call it is a death cult. And so, if Iran had gotten nuclear weapons, that would have meant that Turkey would have wanted nuclear weapons, Saudi Arabia would have wanted nuclear weapons, the entire region would have armed, and that would have been a disaster. So getting rid of a death cult anywhere on planet Earth, I think, is a very positive thing, especially when that death cult is close to getting nuclear weapons.
Was the market kind of factoring that in before, or this is a?
I think the market was. I think the market was just not focused on it, and now it's focused on it. But I think potentially it's unbelievably positive.
Okay, tariffs and trade. How do you figure that? Because we were just talking GDP estimates with Steve Eisman. Economists that CNBC surveyed think that it's going to hurt the GDP for the remaining quarters of this year, but they do think it kind of shrugs it off next year and the economy's back and growing at a normalized pace.
Well, I think that's very true if there's no trade war.
Okay.
So that's why I say the situation is very binary. So look, if we reach deals with all these countries and there's no trade war, I'm very positive on the U.S. economy long term, and I would be very positive on the markets. But if there's a trade war, chances are we go into a global recession. And it reminds me a little bit about all the books I've read in life about World War I. Nobody wanted World War I, and yet because of all the reciprocal treaties that existed between countries, they somehow ended up there. I don't think anybody wants a trade war, but it's certainly possible. And again, I have no way of handicapping it at all.
Would it be with China or would it be with everybody?
I think it could be with everybody, potentially. I mean, China is the one that gets the most press, but what I find somewhat a little bit more interesting is Europe. One thing I've learned from some of my guests on my podcast is that the EU has authority over tariffs. And they already made an offer to the United States to reduce tariffs to zero. And President Trump told them to take a hike because he's more interested in everything else. And it's the everything else that's more complicated.
The non-tariff barriers.
The regulations, the VAT. And each country apparently in Europe has, not legally, but an effective veto about any issue they care deeply about. So if we were to, let's say, try and negotiate to getting more agricultural products into Europe, France would probably say no, and then it's just no. So I don't know how to negotiating with Europe is like trying to herd cats, given the way they're structured.
So it just has the potential to be a much bigger problem.
It can be.
Yeah.
Like I said, nobody wants a trade war, but we could still end up there anyway. I mean, the negotiations of trade are incredibly complicated with incredible special interests involved. It's complex. It takes time. Anything could happen. I just don't know how to handicap it at all. It's not a risk that's quantifiable.
If it were settled favorably, would it even be better than it was if we hadn't done anything before?
Maybe. I mean, potentially things would, a lot of businesses would come back to the United States.
And we have been, a lot of the things that Europe does, I mean, it holds them back. It holds the world back. They don't, there's no innovation.
No, look, I have great sympathy with respect to what President Trump is trying to achieve.
Right, but you can't handicap what it does for markets.
The outcome. Right. It's impossible.
Steve, the reason we like talking to you so much is because of some of the legendary calls you've made in the past. You saw the housing crisis coming before most people, and you found a way to kind of bet against housing and profit greatly from that. There are a lot of people who are talking these days about the potential for huge change, the potential for seismic moves. whether that be in the U.S. Treasury market and buyers disappearing, whether that be the collapse of the U.S. dollar as our, the reserve currency. Do you put faith into any of those that talk?
Let's do a thought experiment. Okay. Let's go back, let's say, 2005. And Pete Peterson comes on this show. I don't know who was the host back then.
It was us.
It was you? Okay, there you go.
2005, it was the two of us.
At least us.
Okay.
Yeah.
And, he comes on and he says that the deficit's horrendous. It's going to crowd out investing in the United States. Interest rates are going to go higher. The dollar's going to lose its reserve currency. Yeah. And your next guess is me. And a younger, less gray-haired, more arrogant Steve Eisman. And I come on and I say, I love the deficit. We're the reserve currency of the world. We could have more deficit. We're not going to lose our reserve status. Interest rates are going to go lower. There's going to be no crowding out. And in 20 years from now, the U.S. economy is going to be more dynamic than it's ever been in our lifetimes. And the reaction would be, that Pete Peterson, what a sage, and that Steve Eisman, what a schmuck. And who was right?
You were right.
I would have been right.
Yeah.
So I think the question people just
tell us
don't
now
ever.
What you
people
see. Is that same story go for 20 years?
The question people don't ever really ask is, people have been making those kind of predictions for 40 years. Why haven't they ever come even close to true? And if you notice, the 10-year has been in the same range for the last 2 to 3 years. So why hasn't it come true? And I think the answer is that we are more than just the reserve currency of the world. The entire financial system of planet Earth functions on treasuries, from overnight repos to sovereign wealth funds parking their money, and there is no alternative. And if there was an alternative, I would say we have to deal with the deficit now, because then we have the potential for losing our reserve currency. But there is no alternative, and until there is an alternative, I mean, I think we should deal with the deficit, but I don't panic about the deficit because nothing's going to change.